Thank you so much, David. It's my honor to continue the second leg by taking over from you. Good afternoon, everyone, and welcome to the Jamaica Stock Exchange's 14th staging of National Investor Education Week, which is also being undertaken during World Investor Week. We must commend the JSC for its invaluable contribution to the financial literacy and empowerment of Jamaicans. A reminder of the theme for this year's activities: savings and investments, how to build and create generational wealth during and post-COVID. It couldn't have been a better theme for the time that we're living in. So if you're all about learning, planning, building, and channeling all that into wise financial actions for your future, your best life, and that of your loved ones, then you're in the right place. Because the sessions so far and those to come are here to expand your horizons about how to save and invest your money in order to create wealth for now and for generations to come. We should all leave here knowing that it's unacceptable to simply sit by and watch others building and stacking while we remain stagnant. Now, just a reminder of the protocol for engagement with our experts today. All questions should be placed in the chat room so that they can be addressed. Don't be shy about asking questions or making comments following the presentations. And remember, the more you know, the more you grow. Without further ado, let's turn our attention to our first presenter for the afternoon, Ms. Patrice Minott. She's the Senior Investment Advisor at Barita Investments Limited. Now, Ms. Minott is an experienced personal banker. She has been providing excellent client experiences in the financial industry for over 10 years. She gained valuable experience in the banking industry, where she honed her skills in sales, team building, and financial analysis. A licensed financial professional and senior investment advisor at Barita, she holds a Bachelor of Business Administration from the University of Technology in Banking, Corporate Finance, and Securities. Now it's over to you, Ms. Minott.
Thank you so much, Ms. Coombs. Can you hear me clearly?
Loud and clear.
Perfect. Good afternoon to all the panelists and everyone who has taken the time out to participate in today's webinar. I do hope that all the existing investors and new investors are pumped up and ready to ensure that their money is working for them. So today I'll be offering some insights on turning your salary into wealth. Basically, to accumulate wealth over time, you need to do 3 simple things. These 3 simple steps are: 1, you need to be making money. Before you can begin to save or invest, you need to have a long-term source of income that's sufficient to have some left after you've covered your expenses. So whether your earnings are from salary, rental income, business income, etc., you need to ensure that you are making money. Number 2, save money. Once you have an income that's enough to cover your basics, develop a proactive savings plan. So you could decide to put aside maybe 10 to 15% of your earnings on a monthly basis to facilitate emergency funds and investment. The key is creating that plan and stick to it. Number 3, invest money. You set aside a monthly savings goal. Once you set aside that monthly savings goal, invest it prudently. Consistent investment over time is what will help you in creating that generational wealth. Now, in order to ensure that those 3 simple steps are effective, you need to be able to manage your financial goals. And in managing your financial goals, there are some key areas that you need to be mindful of. The first one is know the difference between needs and wants. I know even for myself and most Jamaicans, idly we spend $10,000-$15,000 a month on things that we don't necessarily need. So it is important that you're able to differentiate from what you need versus what you want. Second area to look at in managing your financial goals is making a budget and or adjusting your budget. Now, this is important, and a lot of persons don't put as much emphasis on it. Budgeting actually allows you to create a spending plan for your money. It ensures that you will always have enough money for the things that you need and the things that are important. Thirdly, you want to establish your financial goals and hold yourself accountable in attaining those goals. Your financial goals can either be long-term or short-term or both. They should be specific and measurable milestones that, when reached, bring you closer to your ideal future. You also want to take advantage of available opportunities and available resources. And for example, the JSC New Investor Education Week, this is an available resources that new investors are really getting insights on what to do, what not to do. The idea of just being patient and invest in the stock market and build wealth over time. Last but not least, you want to stay on track with your strategies. Maintain discipline, invest regularly, diversify, and stay invested. So you've gotten the three major tips of turning your salary into wealth, which is make money, save money, and invest money. You've got an understanding of how to make that effective is by managing your financial goals. And now you're going to look at investing. Now, a lot of the presentations before spoke about two key areas really when it comes to investing is understanding your risk appetite and have a goal in mind. Once you decide those two, then you want to develop a strategy of what you are going to invest in terms of what you want to achieve and what level of risk you can take. So there's basically three broad headings of strategies. The first one is an income base. Now, the aim of this strategy is really to generate cash flow. It is mainly focused on fixed income securities and tend to be low risk investment options. You can look at income or growth base, and this is where you find the balance between the income and growth objectives. And these investment options are normally of moderate risk. Now you can decide to do a growth base where your aim is really capital appreciation. And this is where you focus on stocks, real estate, unit trusts, and most of these investments in the growth base are considered high risk. Now, just to give you a more detailed understanding of the different strategies, the income base is a strategy that is centered on building an investment portfolio specifically structured to generate regular income. So we do have blue chip stocks that have been around for a while that's paying exceptional dividends, and believe it or not, both institutional investors and retail investors have stocks, dividend paying stocks that are covering their expenses, or that return is really passive income that they're using to do further investments. And you can also have fixed income investments, other fixed income investments that offers that periodic cash flow. So that's when you're doing the income base. When you're looking at your growth or income-based strategy now, these are more mutual funds and exchange-traded funds that invest in stocks and other securities that combine for long-term growth and short-term income. They provide a balance to a portfolio. That way, it can earn money for the present and the future. And here at Barita Investments Limited, we do have our Capital Growth Fund, which is our flagship product, which falls under the growth and income-based strategy. When you're looking at a growth-based strategy now, this is basically a strategy focused on capital appreciation. Invest in companies that exhibit signs of above average growth, even if the share price appears expensive in terms of metrics such as price to earnings or price to book ratios. So in concluding, turning your salary into wealth, one, you need to be able to making money, you need to be saving money, and you need to invest. And for those three simple things to be effective, you need to manage your financial goals. So wealth and legacy, let's build both. Your wealth is one thing, your legacy is another. At Barita, we believe in building both. Let Barita apply our money IQ in developing your unique path to build wealth and legacy that endures.
Thank you so much for that wonderful presentation, Ms. Minott. Great pointers, excellent pointers about turning your salary into wealth. As you said, you have to be making money, but you need to be saving that money and also investing that money. Now, there are two questions here to begin with for you. The first one says, do you have any online form or document that guides the investment planning process? This is from Mr. McIntosh.
Okay, thank you for that question, Mr. McIntosh. Yes, we absolutely do. So most of our presenters would have spoke on assessing your risk appetite. So here at Barita, if you go on our website, we do have what we call a roadmap. It is a tool that is utilized. It asks you a few questions that pretty much will help to determine your risk appetite. You go on, answer those questions. It also offers you recommendation. And then this is where a licensed advisor like myself will come in place to explain to you what your risk tolerance is, along with understanding what your goal is, what time horizon you have, and how much money do you have to start investing. Because realistically, any money that you're starting to invest with, especially if you're going to the stock market, is money that you're not going to need within a 12-month period. So we do have that roadmap tool on the website that you can take. We will offer further guidance from there. Also, upon signing up, we do have our online platform where you can start the process with applying for a stock brokerage account or any other investment account here at Barita. Mr. McIntosh, I hope I've answered your questions.
Okay, there's another question here, Ms. Minott, and that question is, this person wants some examples of financial goals.
Okay, so for example, a financial goal could be simple. I know a lot of persons try to save. You might try to save in your savings account, but you're not seeing any return. So a financial goals could be that, okay, within another 5 years, I want to have $1 million or more, just to have that financial freedom, right? That is your ultimate goal. So the plan now is, say, for example, the Barita Capital Growth. I'm going to set aside $10,000 every month to put to that fund within a 12-month period. That's $120,000. And the fund has an average approximate return of about 15 to 20%. So imagine in 5 years, you're earning $120,000 of your actual deposit per year, plus an average of 15% annually. So your financial goal over the 5-year period would have been achieved, but you make the goal, you have to stick to it.
Okay, thank you so much for that. Now, another question, which I'm sure you get a lot of. Now, some persons might say that investment is for persons who have cash to spare in their pockets, because all they have left from their salary is just like bus fare and lunch money. So if by the time I'm done penciling out my expenses, there's nothing really left, how do I invest? how do I even say? What do you say to that person?
Okay, thank you for that question. And that's a very important question. And yes, we do get that every day. The most widely missed information out there is that you have to have a lot of money to start investing, and that is totally not the case. That is totally not the case. When it comes to stocks and other unit trust funds, you can start with a minimum of $10,000. So in terms of you not earning enough, you need to go back now to one of the first points of managing your financial goal is to knowing your needs and wants. So persons really need to be truthful to themselves, assess how much they earn, look at what they spend, and really most times you don't need you don't want to, well, you're spending on things that you don't necessarily need but want. So if you start there, cut back on that and try to put down $10,000 every month, you'll be surprised of how much you have built wealth. And we can take it into context to say, for example, a low price stock that has a more long-term growth. Let's use maybe Chance Jamaica, for example. The price is selling for less than $1 thereabout. So if you invest even say 100,000 there, for example, in another 20 years, if that price moves to $50, it's a possibility. You're looking at $5 million worth when you've only spent 100,000 on it. So it's really assessing, knowing your needs and wants, and put aside the money from there and start and stop procrastinating. So that's really how it works.
Okay. Thank you so much. You just heard there from Ms. Patrice Minott. She is Senior Investment Advisor at Barita Investments Limited, and she was telling us how to turn our salaries into wealth. So if you want more information, you can contact Patrice or any other investment advisor at Barita for more advice.